Welcome to this session. This is CA Paresh Desai from Sankalp Adventure. I'm a chartered accountant the last 30 years and in the coaching and training field for stock market since last 17 years. I'm an author of two books and I'm also an visiting faculty and faculty also at KES College Kandivali and many other multiple institutions and organizations. So welcome to this session. This session is going to be on understanding how the markets work, what are the market basics, and also finding out that how to analyze the trade, how to understand what the markets are, how to find out which is a good time to enter into the market, how to identify the stocks, and which I'm sure will be helpful for you. So let us continue with the understanding part and the training. So now I'm coming to directly to the overall market structure. Okay. So let us see what you can do over here when it comes to this analysis. Okay, so I'm going to tell you what all is possible when it comes to the market. What are the studies which are there? So there are two studies which are there. One study is going to be your technical chart study. Okay. And another is going to be your fundamental analysis. Okay, so in fundamental analysis, you've got your profit and loss, balance sheet. Okay, then out of this, you'll get your ratios. Then you're getting here, you're getting a cash flow statement. Okay, so you come to know that how good a company is based on the fundamental analysis. So profit and loss, balance sheet, and the ratios basically you'll understand that will tell you how the company is. But how do you know what is a good time to enter? That is where people make a mistake. Okay. So the reason why that happens is of technical charts. So what you saw here is the technical charts, correct? So Cochin Shipyard is a stock which went up till 3,000 rupees, and this was last year. Okay, so somewhere around March 2024, it was something like 700 or so. Okay, can you see around 700, 800? You see the price? On the y-axis, you'll find that there is the price. X-axis, there is a date. Okay, x-axis, there's a date. So bottom x-axis is the date, and y-axis is the price. So date here shows something like 2024-03 means March. It was somewhere around 764, and by let's say July, this same the stock went to around 3,000 rupees approx. Can you see this price? Okay, the stock went to 3,000 rupees, and here it was just drawing these two lines. So March it was 764, and by July it went to 3,000. So can you tell me how much percentage return this stock give you within just what six, 4 times, 5 times? So this is 7, 8, 4 around 300%, more than 300% you can say, right? So we've got somewhere around 800, 8 3 or 8 3 24, 8 4 approximately 300 times or around 350%. Okay, so maybe 300% is something which you got in just 6 months.
In the 6 months.
Yes, this is March and this is July.
Yeah,
Okay, so this is a good stock.
absolutely.
Now tell me one thing: why is the price going up?
I think they are into defense.
No, when the price was going up, I make you understand that how the chart works.
This is the shipbuilding.
This is a shipbuilding company. Okay, the Cochin Shipyard.
Company might be, see,
They must have got good orders.
good orders
and
the international.
So basically, something good is happening in the company.
And it's not monopoly, but not many competitors.
Fine. So if the price is going up, do we agree that something good must be happening in the company? They must have got good orders, international orders, or their profitability would have gone up. Yes, everyone. Okay, so there is a simple law of economics, law of demand. Law of demand says that if your law of demand is actually it says that if the price goes up, the demand will reduce. That is the actual law of demand. But there's an exception to the law of demand which says that if you're expecting the price to go up even higher, then more quantity is going to be demanded. Like suppose if you're expecting gold to go up, people will buy more of gold. If you're expecting, okay, this prices are going to increase, then although they've already increased, still people are going to buy more. So demand will be created. Okay. So on the chart analysis, what happens is if the people are expecting that the price is going to go up, although the price has gone up, they're going to buy more. For example, from 800, this stock went to, let us say, from 800, it went to something like 1500 initially. Okay, so from 800, it went to 15, 1600. But at 1600 also, it did not wait. So 800 to 1600, already it is 100%. Already it is 100%. But
Right.
still, people thought that it is going to go up. Why? Because maybe whatever the fundamental reason. So there are always going to be two parts. One is going to be the fundamental reason why what is happening in the company front. And second is going to be the reflection on the stock prices. So stock market is nothing but a reflection of what is happening on the reality front. In the long run, if you check out the, let us say, the reports for a 5 year, 10-year period, if let's say 5 year, 10-year period, the performance is going up, then the same thing you will be able to find it in the long run on the charts also. So now there is an opportunity here because of this, what I told just now, the most important statement. In the long run, the price goes up, but in the short run, the price comes down because of the sentiments, because sometimes the market is already overheated and then the price comes down. Okay, so if you see here, this price went up from 800 to 1600, continues to go up 2000, and from 2000 also it continues to go up. It went all the way, what you have seen is up to almost like 3000 rupees, 29 something, 2900 something. Okay, and it was just within 6 or 7 months.
But during this period, there was a market correction was there for
So-
about 4 months, right?
So market correction happened after September, July, August, September. Market correction happened after September. So somewhere around after July onwards, then there was a correction in the market. You have to understand that if it is too overheated हो गया, that means there is the prices got a shot up very high. Then there are going to be some corrections. Correction means the price would come down. Okay. And if it comes down, now the beauty of the technical chart analysis is that whenever you can see the price is going up, yes, no, from March to July, you can see the price is going up. Now I will
Yes.
change it into something called as a line chart. Okay, you can see the price is going up, correct? Now just see after this what's happening. Now what has started here? What has started here? This is called as a reversal. Okay. So first of all, you have to understand that there are three things which you need to know. Okay. The three things what you need to know is, number one, that first of all, when not to enter. So where was the case where not to enter? At the top, 3000. Correct. So 3000 was not the time to enter, first of all. Secondly, when to hold. And third, when to enter. यहाँ पे when not to enter, यहाँ पे when you should enter. And also one more thing which is required, which is your exit. And all this is going to be based on your technical chart analysis, because technical charts, what you saw here, is based on the demand and supply. If the demand for anything increases, what will happen to the price? Price goes up, and you'll be able to see it on the charts. Correct? I make a simple statement. See, trade what you see. Trade what you see. Otherwise, somebody is bought at, let's say, 800, the price would have got to 1200, you would go 50% return I got. Let me exit. And then you would exit taking that 400 rupees profit. But then from 800, it went to 1500, 1700, 2000, 2500, 3000. Till 3000, there was no reason to sell based on the chart analysis. If you understand the charts, you will understand that there was not sufficient reason for you to sell. It is like you sitting in a train, like you got in the local train here from Andheri to Churchgate. Okay, so you sit in Andheri and you actually plan to go to Churchgate. Okay, then the train goes to Bandra. It stops. Normally it will stop probably half a minute or 1 minute. Okay, but it waits for let's say 2 minutes. Then you'll start thinking, what is happening? Why the train is not going ahead? And then what if you get down? What will happen? You get down and the train again goes ahead. Why did I get down? Correct. And then the train goes ahead and it actually reaches the destination also. So holding is very important because if you don't understand how to when to hold, you will exit at the wrong time before there is any indication to exit. So here what happened was, in this, the price actually was going up. It kept on going up, up like this. Right? So let us assume that this is 800 and this is like 3000. This is 800, this is 3000. हाईएस्ट कितना जा सकता है? कुछ भी जा सकता है. वो हाईएस्ट होकर 30,000 भी जा सकता है. But what time frame are you asking? Are you asking 1 year, 5 years, 10 years, or what? Highest can be anything. Long run, anything is possible. Okay, like how much money can you earn in a lifetime?
In a lifetime.
हाँ, आपके लाइफ में कितना पैसा कमा सकते हैं? अभी पता है क्या आपको? You just started, right? So do you know how much? What is the maximum income you'll reach? Even you don't know. Correct. So it is like asking how much maximum money I can get. You can have probably a target. Okay, I want to earn maybe whatever 10 lakhs in a year. I want to earn 1 crore in a year. That could be a target. But right now you don't know how much you will earn. So this is actually what is this. These are all companies. So when you buy these shares of these companies, you become a partner with that company. Become a partner.
800, 3,000 is the price of one share.
His price of one share went up from 800 rupees to 3,000. So share is basically you become a owner of that company. So you buy one equity share. Equity share means equity. Share means share in what? Share means a part in the equity capital of the company. Capital is required for the company to do business. So with the investors' money, they will collect money from the investors. They will issue them equity shares. From that money, they are going to do business. With that business, they will do manufacturing. They will sell the goods. Okay, and when the performance of that company increases, looking at the performance, I told you market is a reflection of what is happening at the actual fund. Looking at the actual performance, what happens to the company shares demand? The demand will increase. If the demand increases, what happens? The price goes up. The price is going up. You can see it in front of you. Correct? And now from 800 to 3000, can you see what has happened is that this is called as a uptrend. I said you become an owner in the company. Have you seen watch this movie Pushpa? Yes. So there is a scene in Pushpa movie where Pushpa goes and is negotiating with Konda Reddy, his boss. He agrees that so there is a deal going on. Konda Reddy says, for every 1 crore rupees of the booty which you get, I'll give you 5 lakh rupees. So every 1 crore, I'll give you 5 lakhs. But Pushpa says, no, I don't want 5 lakhs. Give me 4%. 4%. Okay. Are you crazy? I'm giving you 5 lakhs. 4% will come to 4%. 4 lakh rupees. No, I'm happy with 4%. Okay, whatever it is, I'll give you 4%. Okay, then he comes out. His friend Keshav asks him, Pushpa, what did you do? Just like 1 lakh rupees, you just lost every 1 crore. You don't understand. When I'm taking 5 lakh rupees, I am the employee of Konda Reddy. I'm getting commission. But when I'm taking 4%, I'm partner with Konda Reddy. Yes. So my status and his status is the same. So when you buy equity share, what happens is You get a share in the company. So you buy one share of Reliance. Your status and Mukesh Ambani's status is the same. You buy one share in in whatever Adani this import. Your status and Mr. Adani is the same. Okay. Why? Because they might be having lakhs and crores of shares. You are having one share also, let us say. But you are still a part owner. Like that, how you are, there will be crores of other individual shareholders who are holding the shares. And with that money, company is doing business. Company does business. The turnover increases, profits increases. And then what happens? Looking at the actual performance, market is a reflection of what is happening on the ground. The demand increases. If the demand increases, the prices increase. And the beauty nowadays is that you can see it here, what is happening to the price. Okay, you can see the price is increasing, going up. Okay, so this is called as a uptrend. So do you understand uptrend? How does it look? Clear, everyone? So if you understand how the uptrend is, then you also let me explain you also what is a downtrend. Okay, so here what happened is, if you see here, that the downtrend started. Can you see? It is not going, the price is not going higher than this. Can you see? Yes. Everyone online also, can you see, guys?
Yeah.
Yes.
Yes. Online, can you see? So this is, yes, thank you so much. So what was an uptrend from here? The trend changed. The trend changed. And when the trend changes, the technical chart analysis will tell you that the trend has changed. It will be based on the concept like supports, resistances, trend lines, candlestick patterns, chart patterns, which will tell you, okay, now the trend is finished, better to exit. Okay. So, for example, when the price started going below this particular line, which I'll just mark over here, you will not probably understand that why I marked this line. But when it started going below this red line, that was a time where one should have exited right here, 2669. Okay, correct? Yes, Aniket, thank you so much. So this was the time to exit. As I said, you probably may not understand why I'm drawn this red line, but after this, can we see what happened?
Oh my God.
Oh,
It's almost off.
So if you have not exited here, the price went all the way down up to 1200 rupees.
whoosh.
Do you understand this part which I told you?
Got it.
When to, when not to enter first of all, and this one when to exit. That was the last one. We have when to exit. Exit is like, so you've seen this fighter planes, no? So once in a while you have this news when the fighter plane crashed, but the pilot survived. How is that possible? There's only one in that fighter plane, probably one or two pilots which are there, but they survive on the plane crashes. They are in a cockpit. They cannot even like come out and like walk out or something like that. But still they survive. Here you should understand when to press that eject button over here. This was the eject button right over here. Now this is what I'm giving you is basically a line. I cannot make you understand everything, but if you are able to get out at this point, you will save a lot of money. Okay. Initially, I did not know about this when I started 25, 30 years back. I was the chartered accountant. I used to see the balance sheet of the company. Balance sheet is good. Chalo, let us go and invest. So it used to happen sometimes that I would invest at this time. I look at this company is good, price is going good, price is going up, balance sheet is also good, ratios are good. Let me buy. And I would buy sometimes over here. Okay, I would buy something over here. Now, if I buy over here, what happened after that? You saw. Okay, so if you buy here, then what would happen? You would go in loss, right? So buying at the wrong place, you would go in a loss. So you should know first of all where not to buy. So that is the first thing. If you understand where not to buy, what will happen? You will save that money, which will not be a loss. So money saved is money earned. That becomes your first earning. Otherwise, most people, they invest in the market and then they say that whenever I invest, after that the market comes down. That is a very common complaint. The moment I invest, somebody is keeping a track on me and then price comes down from there.
If you see the technical chart and on the reverse side, this side,
Huh.
and it started from here and copy a peak, then the same thing will come under.
So now there is the other way around also. So like how there was a reversal when the price went up, then there was reversal and came down. Then there is other way around also. And from here you'll find, I'll now go back to the same line chart. Can you see what's happening still?
It's falling.
Still falling? Still falling?
Yes.
Yes. Okay. Now after this, now again what has happened is now this downtrend has finished here. But how will you understand that the downtrend is finished? But so when you see, so that is just one of the ways if you see that upward, but then if you go only by one thing, sometimes what might happen is that you might mistake this as a uptrend. Okay, the trend has started. But from there, sometimes it goes even more lower. Okay, so there are something called as a trend lines. There is something called as supports, resistances, which will tell you that yes, this is a good time to buy. And then after this, somebody is bought at, let's say, 1200. Did it go up immediately?
No.
No. So has a trend reversed? Not yet.
No.
So this, what you see over here is called as the sideways trend. This was like more like a sideways. Okay. So there is a second type of trend, which is sideways. We saw what was uptrend. Correct. Over here, we saw what was uptrend. I'll also show how the downtrend would look over here. So the downtrend would look something like this. Okay. And if you're looking for something which is called a sideways would go. So this would be a sideways. This would be a downtrend. This is the sideways. Okay. Let me just check if I can. So sideways would be something like this. You might feel, oh, the price is going up. Okay, and you buy here, but then you find that you are stuck in a sideways move. Then the third one is where what we saw was that the price would go in a downtrend. This is a downtrend. Two activities which you can do in the market. One is the income generating activity. Second one is wealth creating activity. What is the difference between these two? So for in the income generating, this goes under trading. So when we say trading means what? You buy, sell more frequently. Okay. And wealth generation, this is called as investment. So investment is where your outlook is more than 12 months. Okay, minimum 12 months. It could be 1 year, 2 years, 3 years, 5 years also. Okay. So that is the minimum which is there, which you can qualify as an investment. Minimum 12 months. Okay. And second one is for the trading part. So investment, basically, if you're doing investment every month, whatever savings you got, put into the market. Let's say you got a salary of 1 lakh of rupees. Okay. People normally think is that income minus expenses is equal to savings. Correct? Yes, no?
Yes.
No. Don't follow this. Income minus savings is equal to expenses. Do this. Otherwise, you'll never be able to create wealth. What we normally try to do is, okay, I've got so much income. let me spend this, and then whatever remains, I'm going to save. No.
Percentage.
Whatever percent you decide, 5%, 10%, which you know that yes, this is something which I can save on a regular basis. It should not happen that 1 month you save 50%, next month nothing, again 10%, then again 30%. No. Let it be a fixed percent. But in a month, you can sometimes, if you decided 10%, you can go to, let's say, 15%. That's fine. But 10% should be minimum. So whatever the income, that 10% has to go directly. This has to go directly in your investment. The earlier you start, whatever I teach in college, that is, I don't teach them, or it is like, it's a very, very nominal amount I get over there. But what I get is more the satisfaction that I could at least strike a chord in the young minds of the students, that how it is important to invest, start investing now. So that is my objective, to create awareness in the youngsters. Because from now onwards, they might be getting, probably they don't have any income now. Okay, they're like undergrad students, FY, SY, TY students, they don't have money. But they have definitely their some pocket money. It could be 500,000. Sometimes for birthday, they get like 5,000, 10,000 rupees. Right? So start investing that amount. Even if it is like 200 rupees, you can still buy something which is worth 200 rupees. Suzlon is something like what, 85 now. Buy two, 3 shares of Suzlon. One of my clients bought 1 lakh shares of Suzlon at 8 rupees, March 23. 8 rupees. In March 23, it was 8 rupees, Suzlon. They are into wind energy. Okay. Now that same stock, if you see from 8 rupees where it is got. This was the time when you invested here. Can you see this sideways trend? Yes. And then over here, there was a breakout. So if not at 8, he bought it at 8 rupees because 8 would have been, the other study was there. So around 8, 9, 10, 11 also we have bought. Where did the price go to? 85 rupees. And this was something like what? June 23. And this was September 24. 1.5 years. And in 1.5 years, the return was 600%. Need to know also something called as a risk management, because this is stock market, and people who have lost money is because they did not follow this. What they did was something called as a gamble. Those who lost money, in severe cases, they have committed suicide also. What was the reason? Now you see the railway, local railways. Okay, that way one incident came where 15 people died in just one accident, who were hanging outside on the train, what Kalwa or something. But every day, are you aware? Every day, even today, every day 10 to 15 people die on the tracks of local trains. Every day. Not on the local trains. Churchgate Virar, then CST Thane, CST Badlapur, CST this, that. Every day in Mumbai and Thane, around 10 to 15 people die only in this region every day. Why does that happen? There's one person who understands the risk. He will go on the platform before the train comes. He will go and sit inside the train and travel safely. There will be a lot of others who will be late for office. Oh, I'm already late. My boss will shout at me this, that. They will come they'll come rushing when the train comes, and then they'll hang out and go. Same train. Two people, one is traveling safely, another one is gambling. You can gamble literally everything. Anything in life you can gamble. Not following a traffic signal, gambling. Okay, hanging out on the train, gambling. If you are walking on the road and probably walking in the middle of the road, somebody comes and hits you from behind, again that is gambling. So there's gambling everywhere in life. You have to manage the risk. Risk is there everywhere. There's not a single place where there's no risk. I know only one place where there is no risk. What is that? एक जगह जिधर there is no risk, absolutely no risk.
Just don't do anything and just don't.
No, still there is risk. Don't do anything. You sit at home, have a fall. There is also a risk. Sitting inside the house, there also is a risk. Going to the bathroom is also a risk. Trading in the market is risk. Not trading in the market is also risk. Only one place there is no risk. The final resting place.
50 days.
After that, there is no risk. Nobody will going to trouble you. Once you read that, they're absolutely bliss. Koi risk nahi, nothing. No market, nothing.
8 p.m.
Got it? So there is risk everywhere. Whether you want it, whether you don't want it. What you need to do is you have to manage risk. So if you want to earn money from the market, then you have to do risk management. I will show you how. Okay. I'll just give an example. For example, let us say the stock price was down. Now it has started going up. Okay. And you think that this is a good time to buy. Can you see? Okay, something like a reversal dikh raha hai? Yes. Okay, I will buy at 100. Now, if you buy at 100, is there a guarantee that the price will go up? No guarantee.
Slightly come down and go up.
But at least there is an indication based on what you learned just now. Correct? There's an indication that, okay, it looks like a reversal. May or may not happen. But it looks like a reversal. So let's say you buy at 100. You think that the price will go to 130. So you are getting a reward of how much? 30 rupees? Yes, online clear? 30 rupees ka reward hai. But this is a market. This is a business of investing. And any business, there is a risk. You take a calculated risk. It is not like jumping out of the building. Okay? It is you take a calculated risk. This is a businessman. You take any business which is there. If you are a shopkeeper, you know that, okay, if I keep so many stocks, maybe out of 100, 4 or 5 items may not get sold. That's okay. I might have to sell them at a discount. But I will not make a big loss. When the new business is started, first 2-3 months, can you guarantee that the immediately open a business, people are going to rush into your shop? No, that is a risk you're taking. It is not that you are going to take orders from everybody. No, let's say you open a restaurant. Are you going to go? Acha, are you going to come to my restaurant? Okay. Are you going to come to my restaurant? Okay. Are you going to come? You can take a confirmation. You come 100%, then only I'll open a restaurant. Does it happen that way? Sir, guaranteed will you come? Please sign on the paper that you will come and then only I'll open a restaurant. Has it happened? No. What happens is, first the entrepreneur businessman will open the restaurant. Now he opens the restaurant, he does not know that the customer is 100% guaranteed to come or not. Okay, the customer may come or may not come. That the time will tell and depend upon what is his cuisine and how is serving and all that. But sometimes even good restaurants don't work. Like in COVID, restaurant was good, but still they had to close down. Yes. So that can also happen that you started and then something happened and because of some external thing, you had to close down. So you might say that, okay, if it works for, let us say 2-3 months, I will work. But if it does not give me profit in 2-3 months, then I will maybe close down. So 2-3 months ka risk liya. But if you know that if this starts working, I'm going to make a good profit in the long run. Okay. So that was also that any business is basically managing the risk, understanding the risk. So here, what if the price starts coming down? If it goes to, let us say 90 rupees, now understand the risk management. Okay, I buy at 100, 90 rupees, I decide that if it comes below, let us say this or something, then I will take my stop loss. Stop loss means if I buy at 100, the price goes below 90 rupees, then I will sell. This is the risk which I am taking. Yes or no?
Yes.
तो risk कितने का हुआ? 10
10
rupees
rupees.
risk. Reward is how much? 30. So can I
30.
take a reward to risk ratio of 30 is to 10, 3 is to 1
10.
approx? Now all the trades which you take are not going to go correct. If the shopkeeper has kept maybe 500 items, all 500 units are not going to get sold. Some are going to get time expired, some will have to sell at discount. Okay, some might get spoiled, but he will still make money. So here, if you are taking, let us say 10 trades over a period of whatever, 1 month, 2 months, 3 months, you are taking 10 trades. If you follow this system, if system agar follow karte ho, okay, this system, if you're following with the proper understanding of what is a chart, when to buy, when to sell, what are these support trend lines, candlestick patterns, all that difference you learn, then you know how to, you know that around 60%, 70% becomes your success ratio. Out of 10 trades, 6, 7 will go correct, 2, 3 can go wrong. But I'm not taking that, I'm taking even more conservative. I'll say not even 7, I'll take 5 go correct and 5 go wrong. Even more conservative. So out of 10 trades, let us say 5 go correct, 5 fail. Means the market you buy and then the price comes down. 5 you buy and the market goes up. So in these 5 cases, you are making how much? 30 rupees, that is 150. 5 go wrong, you're losing how much? So this plus this, you are still safe. So that is the fear people have, that what if I lose my money? With this, do you realize that you can never lose your money? But you have to sit inside the train and go, not hang outside.
Denominator side
Huh?
150, side 90.
Huh?
You can say some
I showed you a risk reward ratio. This is a risk reward ratio that I buy at 100 rupees. If it goes up, I'll make 30 rupees. And if the price comes down to 90, I will exit and take this loss of 10 rupees. My risk is 10 rupees. So reward to risk ratio becomes 30 to 10. Let us say 30 to 10, you can take, you want to take 3 to 1 also, that is fine. Okay, but let us say 30 to 10. And if you take 10 trades, 10 different companies, you buy with this same principle. Okay, here it is 100, 130 and 90. Others it could be like 500, 550 and 490, something like that. So the ratio is the same. Okay, you will not make loss in the long run. You will not lose your money. Rakesh Jhunjhunwala quote, he says it doesn't matter whether you are right or wrong in the market. Because when we take the trade, we think that everything is correct. But I don't know what's going to happen tomorrow. If the price goes up, I'll make profit. But if it comes down, my loss will start. He says it doesn't matter whether you are right or wrong in the market. He says, but what is important is how much money you're making when you're right and how much money you're losing when you are wrong. So when you're making money, you're making 3 times. When you're losing 1 time.
Is this applicable for intraday?
This principle? Which principle? Intraday, there's a different concept. Intraday, basically, you may not get such a this thing. Intraday, you have to more work on your indicators, then supports, resistances. Those are more important. This we are taking from the investment point. Okay, there are a lot of things which you can take. What you can do in the market. Okay, so you can do something called as a intraday trading. You can do short-term trading. You can do long-term investment. If you're doing long-term investment, approximate, you can expect somewhere like 20% per annum plus. Approximately 20%. We saw so many cases, 20% get gone to 50, 100, 200% also. So on an average, because you're not having only one share, on an average, if your investment is giving you 20% plus, you are good to go as a long-term investment, because your involvement is not so much. You're going to see once in a month. Okay, so 20% per annum you're getting, very good. Second is, if you're a short-term trader, then you can expect somewhere like 5% per month. Possible, yes or no? Correct. This also I showed you that after when this reversed, okay, when this thing reversed, what you got was easily 5% because here there was a reversal, and after this reversal, from here there was a reversal, right? And if you take, I'm not taking lowest part also, I'm taking from here. Okay, from here to here. I'm not taking even the highest point where it is currently. So this was what? April 25. Okay, 24 April, 24 May, 24 June. Around 2 months, 2.5 months. 2.5 months, how much is the return?
33 months.
So approximately what? 10% per month, more than 10%.
15, 16.
15, 16. So some stocks will give you 15, 16. Some might give you 20, 30 also. Some might give you 3, 4%. On an average, if you are a trader, you can get around 5% per month. So how much does that become on an annum basis?
60 months.
Multiply by this by 12 months. You get 60%. That is what an active trader can earn. अगर आप active trader हो तो आप इतना पैसा कमा सकते हो. I'm not showing you anything in the clouds. This is actually जो हो रहा है कर सकते हो. Okay. Now when you come to intraday trading is somewhere between 2 to 5% per day. More sugar you put in the tea or coffee, more sweeter it becomes. More study, more time which you give in the market, more you can get from the market. So thank you for watching this. I hope you understood the basic concepts and also got some idea about how the markets work and how do we go about as a training and coaching institution and how the training is given and how the lectures are conducted. So with this, I'm closing this session. Hoping to see you soon in another session. Thank you. See you. Bye.